Okay, I'm going to do some technical analysis on Spirit Airlines and Roblox over here. Uh, Roblox, it's, I would say, fundamentally sound, right? But as for Spirit Airlines, now that's a different story. Their fundamentals are all, whew, their fundamentals look like their charts. Uh, you see all that negative? Yeah, it looks like the charts. But Roblox, yeah, it looks like its charts too. Let's start off with the ugly chart. Let's start off with Spirit Airlines. So we got the daily chart up here and the weekly chart. See this erratic movement? It's because there was such volatility that's been going on here. It's in a downward trend. You can tell by these trend lines right here. This is the trend that it's currently in. It kind of passed it right here, dropped through it. So I'm pretty sure that the adaptive trend finder will recalibrate and probably pull in some of this right here. And over here on the weekly, it's been that way ever since. Well, let's try to get some of it. The first down tool. Want to say that it wasn't realized right until maybe right here. You could call it January of this year. It started this downward trend. If you really want to push things back a little bit to the extreme, right? Say, well, it didn't really start as downtrend. Well, it really didn't start as downtrend until November of 2023. So yeah, that's probably where it would have, you know, you call that's where it started. That was his first major dip below any other low point here and here and here. So you can tell all this stacked up negativity it's got here from prior tense scenarios here. Yeah, at one point in time, it was actually doing good. That October 2012, 2013, it was 2014. Yeah, it was doing good until around 2015, and then all hell broke loose. It's been on this consistent. It's like the bell shaped curve, right? Let's see here. Let's get my drawing tool out here. You go up and then you go down. You know, that's what it looks like right here. So that's where we're at on the daily over here. Um, I would say let's take a look. I mean, let's take a look at the. This is technically a volume profile, but they call it a money flow profile. So it's got money flow and volume combined together to give it a more due diligence. To give it more of the dues, right? You also have it over here, but it's being completely cluttered up by. I can shut that off probably. Let's see here. That, that. There you go. All right, get that out of the way. Let's see what we got over here. Okay. So there's massive amount of selling. There's only been an area that looks like that support probably around the we'll call it the low 55 cent range. There might be an area of support right there on the weekly chart. As far as order blocks are concerned, it's just negative after negative. There is no lower block because it's making new lows, right? So it doesn't have um, any past influence to it on that. But let's try the monthly and see if there could have been anything. No, stock has never been that low before. You see, This is when the IPO first came out on the New York Stock Exchange. This is like this is where it first came out, and this is the low that it made recently at 1 penny last month. Yeah, it dropped down to 1 cent. Imagine buying it for 1 cent, right? Okay. Um, what else do we got here? Let's go back to the weekly, and it doesn't say 1 cent. Oh, yeah, it does. 1 penny. When did that happen? Let's try to pinpoint this area right here. Hell, that was only a few days ago. That was the 21st. Well, I want to call it a few days ago then. November, before Thanksgiving. Yeah, November before Thanksgiving, you could have got Spirit Airlines for 1 penny per share, right? And then you would have been up here at 70 something cents. Damn! If you would have put $10,000 in at 1 penny, Spirit Airlines, right? I mean, you had to see this coming. You would have had to been watching this stock for a long period of time to know that, you know, that shit was going to happen. Even then, I highly doubt anyone's average is 1 penny. I bet you it's somewhere like at 15 cents or something, somewhere around this level. That's what it looks like. So that's where the most volume is at. So I'm thinking anywhere from 13 cents to 17 cents. Middle range would be like 15 cents. So the average person that bought this dip area right here is probably got 15 cents, and they're currently sitting at 80 cents. So they got some money in the game right there if they don't sell, and they might coming up soon. Looks like it's about to roll over. But yeah, this thing has seen better days. Okay, so the takeaway from it, let's take a look at the sub indicators because there's not much to say on the main chart other than it's in this downtrend. It's going to continue moving down. It has this, you call this fair value right here on the negative side. So on the sell side. So anything above it will always should always pull it back down like a magnet and get it to fair value. Anything below it should always pull it back up because that would be like that would be like an overbought, oversold condition, and it wants equilibrium. That's where it's going to find it, at least somewhere within this range. It's going to be attracted to this spot like a magnet is attracted to metal. Um, right there. Unless something changes and there's somehow we have a lot of volume and this ends up swapping to a higher or lower area. If there's a lot of purchasing or a lot of selling going on, it can change. So yeah, but as of right now, that's where it sits at. Subcharts right down here. This is cash flow, right? This is money coming out of the stock or selling coming in on the stock, right? This right here, this is overflow of selling. This is like an extreme of this that it's already is a negative. This is extreme of a positive scenario. This is the hyperwave. This is the they call it the hyperwave. It responds quickly to the movements of the stock price, right? But you can see little waves in here. And what I like to do is when I see that, I like to get out my where you at? Where you at? Right here. I like to get out my little algorithmic wave and try to incorporate it into the existing one. That way, there might be a way to isolate it. Let's see. All right. So I would say that's probably the best example from what I'm looking at. How you see this green line in the background. That is the market structure, and you want to follow that. And then also down here in the MACD or the adaptive MACD, you have the histogram. So you kind of want it to track um, in that area for the most part. Let's see if we can make this stand out. Let's see here. Kind of want it to, like, when this goes up, when you see this blue, this green should be going up. This green should be going up. Yeah, a little one here, a little one there, but this one looks like it's bigger than this one here. Down, up, down, up ish. Then it looks like it had an early down and up and down. So something changed. It was good here to about right here, here, here. Then it started. Then it changed. The algos changed. So let's readjust this to where the change was. So up, down, up. So I would say right here within this area. So what we got here. So we got a down. Let's see. Let's actually move this over here. I'm going to start off right here. Up. All right. Try to get it in the center. And then need to something like that. Okay, so we're going to ignore this part falling back. The most important ones that are the ones that we're trying to calibrate, trying to isolate, is going to be this one, this one, this one, this one, and it's retracing downward. So that right here is a peak, right? And if that's a peak, we can actually pull it back one more. Because this was a peak and then that was a peak. We could probably pull that back a little bit. Right there. Yeah. There. There. Right there. Yeah. So all those are peaks, right? And now the peak could happen late. It could happen over here, or the topic could happen late. It could happen over here. As long as it's in this perimeter, right? In this perimeter somewhere, here, there, somewhere before the halfway mark. If you were to draw a line throughout in the center of these waves, and anything above that wave would be considered too late. It would have to happen. The window of time would suggest it would have to happen beforehand, before it reaches that halfway mark on these waves. So that's how I'm looking at it. And I like to use cycle analysis as a tool that helps me define the price action, the price movement, right? Okay, so this is what it looks like it's going to do. And you can see it here with these little waves right here, right? This is basically a forecasting tool. You got the 1 day SMA and you got the 10-day SMA here. Then you have the volume profile, or you want to call it the money profile, right over here. There was a lot of buying here and here, right? At 2 cents or almost 3 cents, and then at 6 cents, yeah, roughly 6 cents. So there was a lot of selling right here at around 17 cents. We're currently here. There's a little bit of buying here. There's a big hole right here. Let me make sure I got this right. Selling pressure. Yeah. Okay. Volume and money flow. All right, so there was a lot of money flow right here. There was a lot of selling going on right here. Looks like there was buying here and selling there. The yellow indicates high volume. The blue indicates average volume, and the red indicates hardly any volume. So that's what it indicates. So what it looks like here with this, let's put that back on here. Okay. Come on. There we go. So it looks like it's going to fall down and consolidate. Now it's suggested it's going to consolidate before the bottom of this wave, right? Over here, there is one there, which corresponds with this one. So I'll say the likelihood would be a drawn out bottoming scenario right here. It's possible. As of right now, it's not likely. And the reason why I say it's not likely is because if you look at the weekly chart, right, you got all this selling pressure coming in, all this negative cash flow, right? You're currently in a cascade of, you know, overselling going on here with this overflow, right? So if you come over here, you go right. You got money flow colors, which is this regular color. Then you got the overflow color, which is this color within this color, right? So this is the overflows. There's an overflow of selling being, you know, happening here. Then you see this. You see this giant red square looking. You see how it specs here. It's supposed to only spec when you have something like this taking place. It's just a consumption of space with nothing but solid red. So that's very negative. This right here is basically means it's oversold, but things can stay oversold for a long period of time. The hyperwave is on the bottom. Uh, Market structure continues to stay lower than higher. If anything, any spurt up, that would be a short the stock signal, especially with this money flow coming out, hyperwave staying low. All these ingredients are for shorting a stock, pretty much. Any time you have an up like move, an uptick, you would want to sell short, puts, right? That's basically what it's screaming. Now, you know, there's a lot of volatility here. You got the trend is negative. You know, it's got a negative bias, right? So yeah, the money flow is negative on a higher time frame. We can take a look at the. I like to look at the 13-day. It's because it's biased to the monthly chart, but it's still technically like a week, like a 2 week chart. So it's kind of like a half a month, but it's biased because it has a few initial additional days. You know, so it's you would say 10 days would be a half a month because there's only 5 trading days a week. There's only 4 months. I mean, 4 weeks in a month. So you're looking at 20 days, right, for trading. If there's a holiday, maybe less, but typically 10 trading days is half a month. Add 3 more to it. It's probably going to be biased to the monthly side. It's still like a weekly type of scenario. So that's the reason why I like using the 13-day. Um, it gives me the best of both worlds. I think so. Let's see here. Need to do that. Need to do this. Okay. There you go. This little line right here, this is the confluence zone, right? This is suggesting, well, yeah, the confidence. They call it the confluence. Um, Once it starts a departure from that, that means you're losing ground. You know, you should always stay riding that ass right here to have, positive, or riding that ass or passing it like it did right here, how it passed above it, right? It's starting to lighten up a little bit here. It might do something like this, right? But the hyperwave is still negative, market structure is still negative. Like it's biased to the downside. Like everything says short this stock. All right. There's nothing, and you can't even find a. I can't even find a support level on it. because there is no price lower than the current price, and there is no order block built because of the fluctuation it had. Um, well, let me see. Let's get out of here. Let's go to the 3 day real quick. So it has to hold this level. This MACD has to roll over. It needs to go positive, right? It's it's good that it's decreasing its negativity, right? With the the money outflow. It's good, right? But the MACD is rolling over, so on the daily, I mean, you're gonna have to wait for it to do this. It's gonna have to go through a phase where it rolls down, goes negative, then tries to turn back positive. Now is not the time. Now is not the time on the daily. Right? It's gonna go lower. It might hit this trend mark right here at 47 cents, right? Sometime soon. Or hell, even below it at 35 cents. But now is not the time. The time is coming up. You got a divergence like you had here. You got another one here. Money flow is improving because the negative is starting to dissipate. Doesn't mean it has to. It can go all the way down to this line and then regain its footing. Kind of like over here, how it lost all of this, right? Still went down, went sideways for a little bit right here, right? Kind of dissipated, but then it regained the selling, you know? So it could do that. What you want to see if you're going long on the stock is for it to turn green. What you want to see this, right? This is what you want to see. Something like this, something like this, something where the market structure indicator goes into the top part, something where the hyperwave rolls over, turns green, and stays green. You want some of these green mountains over here. You don't want none of the red ones, right? You want to see the MACD go to an extreme and then fold up like it's doing right here, right? And not giving any damn about trying to turn back over, kind of like how it did right here. This choppy shit. You don't want to see that. You just want to see this big, and the space in between them has to be wide. The wider the space in between them is, the better. That equals strength. But when you start to see it trying to come down into it, get closer to this line, it's losing its strength, right? It'll do this and it'll turn red like the hyperwave did. Create a divergence here, here to here, it's basically here to here, and then drop like a rock right here, and it lost all of that money, that inflow money, right? All that green, all that positive momentum is gone, right? Now you can look at patterns. Let's see here. We got a broadening wedge. It's right here to right there, right? It says, oh no, that's descending broadening wedge. So it's a bullish reversal. Okay, now I wouldn't take that under. I would take that with a grain of salt. It's just too wide. What is this? Okay, I think that's a divergence. Yeah, it is right here, right here. Okay, yeah, I see it. There it is. So it has a divergence. It popped. It already played out. Yeah, technicals look bad on the 3 day. It looks like it wants to improve, but if you're gonna hold long, I wouldn't use the 3 day. I would use the 13 day, which is over here, and you still got a lot of work to do, right? Look at that work to do. You need to get this. See your drawing tool. This negative right here needs to go all the way back to somewhere right there. There's equilibrium. You need to see that. You need to see how this played out right here, right? That's what you want to see. You want to see a flattening of that, like completely. Like you want to go in the future, right, and see this big old hole of no selling. You see that, you're going to get this. And that's what makes price action move. All right. Let me get rid of these. Okay. All right, so that's that. Now let's go to Roblox. Now Roblox, I like looking at this stock. This is a sexy fucking chart right here. Woo-wee. All right, let me tell you why it's sexy. First thing, let's get the drawing tool out. You see this here, this wave, right? And then that. All right. See, this is called a consolidation zone, right? You have equilibrium in between the high and the low, the high and the low, the high and the low. You can recalculate it. Right here is the highest volume. Right here is the highest sentiment. Right here is the equilibrium. So the equilibrium for Roblox is at $40. You could say that. $39 to $40 is the equilibrium on the 13-day. Now I'm on the wrong thing. Let's turn it back to the. Then this needs to be the weekly charts. Okay. So yeah, that was the 13-day. That's like holy shit. That's a lot of time, right? That's like damn near almost a month. So now we got the weekly chart up on this side, right? Then we got the daily chart up on this side. Okay, you see this upward trend, right? Right here. It's perfect. What it needs to do, it needs to come back down to this trend. That's a buying opportunity. Once it bumps this and it continues to stay, what I would like to see, right? I would like to see this roll down and go about right there. Also would like to see this hyperwave go down and then curl back up about right there, right? Which would be on the weekly, it would curl up and down and be like that. Something like that right there on the weekly, right? So that's how it would look. It would stay above. It would stay above the center line. This one it would dip below the center line just a little bit, then it would come back up, right? So as of right now, you can swing trade the MACD, right? Um, that's always a good thing, right? So basically, you wait for the MACD to roll over, which it's going to do sooner or later. It's just a matter of time. Nothing goes up in a straight line. You can see it right here, right? You see, drawing tool out. See, this is what we got. Yeah, this, that, 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 and then maybe that. So that's what it should look like, I think, going into the future. Um, So I'm looking at, I would say, okay, using the volume profile, I would say $50 is a good entry for a pullback if it has a pullback. $50 would be a good one. We'll have to keep an eye on the subgraphs though. This thing is a very sexy chart, man. Oh man, look at that. I think I found this stock before. I'm gonna have to go back to my research. There was one that was similar to this. I did this. I posted it on my swing trading chat room that we have in the Discord. And here's another thing that's really sexy too. Let's see. We need this one. Okay, see the MACD right here, how it rolled over. Let's delete that. Let's go to this. All right, you see how the MACD rolled over right here, right? That's about right here. And what I like about it is that. Wait a minute. Why does it look a little bit different right here? Okay, no, I was in the wrong one. All right. So yeah, what I like about these here is that you could actually draw a line across it, right, and get a trend line going here, and it's going parabolic, right? So that white line is the bottom because it's the first one to respond to a turn, right, on the downside and on the top side. And then you have these mountains. These are good things, but when they're slim like this, it kind of worries me. When they're slim like that, that means there might be some sporadic action going on. It's not sustainable. You want to see a big, thick square, kind of like this right here or something, right? When you get some shit like that, it's like, might be over with. See how it did it. 1, 2, 3. Now, if it was just one giant green square, that would be better. But it's going to have to pull back. There's going to have to be an empty space there somewhere. So this divergence, right? Well, I wouldn't call it a divergence. It followed price action, but this upward slope that it has, the lows, higher lows, right? This is really sexy. Um, I would say this one right here would have been the ticker, would have been, and then you could also say it was a head and shoulders pattern, right? So you can say head. I mean, you can say shoulder, head, shoulder. Then you could have went here, neckline. Oops. Okay, let's delete that. Let's take it off of this. Let's go for a horizontal line. So shoulder, head, shoulder, right? You could have said here, neckline, right? So this blue line is a neckline. Anything that breaks above it, that's it. It's off to the fucking races we go. And that's what it did, right? Right here, zoom. But, catching it right here would have been awesome, right? Let's see here where we were at. We're right here. Yeah, that was this one. This one right here, this lower on the MACD on the 13-day, on the weekly, right? This lower crossover right here, right, led you to this bottom. You see right here? I'm circling. Look at the other chart. See that? It led you to this bottom right here that did this. You could have bought in right here at $32 and said, fuck it, I'm selling right now, right? Or sometime in the future. But it's going to have to pull back sooner or later. The algos say sooner rather than later. The MACD says sooner rather than later. The money flow says, I don't know about that. Maybe, maybe not. There's a divergence suggesting that could be true. We could have a pullback. It's red. We could have a pullback. And if we do, where do we go? We got a block order right here, or order block right here at $48. Yeah, $48.78, give or take. That's the center. That would be the equilibrium zone of the block order, right? It's at 9%, which means it's worth $140 million, right? It chops it up in percentages. I got it set at 35 blocks. So they're going to divide the total money flow that's in here by the 35 blocks and give each block a value, and then that value will be a percentage on the total value of each block, order block, right? So this is the 9%, that's 5%, 7%, 4%, 4%, right? So it's basically giving you the strength of the sentiment, right? So the strength of the sentiment is saying that this 9 is greater than this 5, and this 7 is greater than this 5. So how I take it, right, is that if it could break this 9, it could probably break this 5 and then hit this 7. But at the same time, we have this 200-day moving, simple moving average in gold right here that acts as the long-term support. So if it does break that, then it's likely it will break this to reach that. So those are the conditions. The conditions suggest that if we break this 9% order block, right, at $140 million and break through the 200-day simple moving average and get to this zone is, to me, my confidence says it will break no matter what, or not no matter what, but highly likely to, right? And I would be expecting to see that $75 million order block break at 5% and get down to this one right here at 108 million at 7% because it broke the 200-day sample moving average. As well, if it's red, if the money flow is starting to turn negative, if there's a rollover in the MACD, right? The conditions, now on the weekly, okay, it says that equilibrium is going to be at $40. There's an order block right here for 7%, 140 $9 million between these price zones. It's at $40 is the equilibrium area. You got a lot of selling at one point in time that led to the short squeeze. I think that's what it's trying to tell me. Because there wouldn't be a lot of selling in it and price action go up. There would be a lot of selling, price action go down. So the way I'm interpreting the data and the information is that this a lot of selling, a lot of volume, did not break down, shot up instead, short squeeze. MACD was up. Its green background suggests it's a positive order block. The red background suggests a negative order block, but then you look at it, well, why is the red bigger than the green? It's because the overall sell volume was more bearish than the buy-in volume, but the quantity of buying and selling was outdone by buying, even though it was less frequent. It was heavier. Buying was heavier, and selling was light, but it was more often. So that's what that means to me. Yeah, so that's where we're at right here. Upward trend. Wouldn't be surprised to see this almost like it looks like a doji candlestick here come back down at some point, something like that, right? Well, what did I say? $50. So it would be like over here. Yeah. No, that wasn't right. It was like $54. Yeah, I had it right the first time. Okay, so let's delete that. So yeah, something like this. So you could probably say something like that. So somewhere in this zone should be, and I think you could start off at the bottom part of it. Anything below was it $54 should be a buy. As long as the technicals continue to be positive. Now you can check this week over week. If you're really into swing trading, or like you want to make some price movements quick, then you're gonna have to check it every day. You know, and you're gonna have to either add to your position or lower your position. It's something it's like high maintenance. Technical analysis, fundamental analysis is high maintenance. You have to want to do this shit. You have to have a reason to do this shit. If you don't have any of that, you ain't never gonna want to do it. You're never gonna do it. So therefore, you're not gonna know what the fuck is gonna happen next. I mean, just because you get all this information doesn't mean it's guaranteed to happen, but the odds are in your favor that it will happen. If you collaborate it all together, you come up, with a reasonable answer, right? So yeah, back to this. You got a high point here. So if Roadblocks makes it to anywhere in the high $60, I would say anywhere in the $70 range, that's probably a good time to lock his profit. Maybe. I don't know. But that's what I would do. But we could check a higher time frame, like the weekly. Take a look. Well, there is no sell order block right there, so there's no resistance. Okay, but we got all these resistances coming up. But look at this between here and here, right? This is a hole. It needs to be filled. Okay, so what's going to end up happening is typically what happens, from my experience, is that once price action finds its way and breaks above it, right, it kind of waddles down over here a little bit and holds this as support, start inching its way higher, it's going to go up to this one. That's the next stop. That's what it wants to do, right? Matter of fact, this chart almost looks like a Clover Health chart a little bit, how it went up really big and got beaten the fuck up, went sideways, and then sprung up to a resistance zone. That daily chart looks pretty familiar. So, anyways, This is a hole right here that needs to be filled. And once it breaks this, I would say you would be guaranteed to see the $100 range sooner or later, probably sometime next year. I wouldn't be surprised, but I think in this case scenario, if they can't improve their financial circumstances, right? I think the technicals are ultimately going to have that. Oops, delete that. Uh, Ultimately, how this had that, right? I think ultimately it could not make it to the top and then do that. So the financials need to keep on improving. Earnings per share needs to keep on going up. Net cash flow needs to become less negative into a positive scenario. We need to see net cash flow become positive. Revenue is already positive. Matter of fact, it's positive and it's growing exponentially. If you look at the financial sheet that I sent you, you're going to be able to see on the revenue side that it continued. It went from millions to billions, but yet the net um, is still negative. So I don't know how negative it is. I got to check it again. Let's see here. Um, so yeah, the net income, the highest negative it had was 2023 at that 100 1000 100 no $1,152 million negative. Year to date, it's at $140 million negative. So it's a little bit less negative than last year, but it needs to be like shit. I would say if it could go down to like 500 million negative, that's an improvement. It's that they stop losing half of the amount that they have been losing in the past um, 3 years. The past 3 years, they need to get it down to negative 500 million. If they could get that down to negative 500 million, we should be, or this company should be good. We should be good. Whatever, right? All right, so let's finish this up. Let's wrap this up now. Okay, my favorite part about this stock was this zone right here. You can see it. This consolidation zone, these swings. You see it right here. This, 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 because they say, right? They say the longer and the wider the consolidation is, the bigger the bounce will be. So, like the longer, right? The longer and the wider, right? The consolidation zone is, the bigger the bounce is going to be, right? So I think we can make it to $100 before it pulls back like a really big pullback. It might take half of it back, be back down here to $50 again. It's going to take some time to break through this level. I think it's going to hit it and roll over and get back down to maybe $50 again and consolidate right here for a little bit and then eventually break through it. But it will break through it sooner or later. I believe sometime next year it will be in the $100 range. But I believe that that's going to be the finale. I don't know. We'll see what the fundamentals say. Volume profile, I told you here. Here, I told you where to expect the price to be, what to do, what not to do. You could always ask me to review it later if you really want to get down to it. There is another graph that I could send you about technical analysis. It's the AI generated support and resistance levels for Roblox if you want that, or for what is it? The airline company, right? So I think this chart right here is going to be way more promising than the other one. I think the other one, you probably you're in it for the long haul. If you're in it for the long haul, you might as well just say, I'm gonna start off small and dollar cost average once a month or something like that until the financials start to improve, or at least until you see something good going on. You're gonna be holding that company for like a decade, and yeah, eventually you will get returns if you dollar cost average. I would do it very, like I said, very slow, very patiently, and yeah. Other than that, we could take a look at the Clover Health chart real quick. Let's see here. So I got cycle analysis on Clover Health. You see how it was consolidating right here? It was still going below, but once it popped up, that was a consolidation. It didn't take long either. It kind of happened actually fast. I was expecting it to go lower a little bit longer and then go up a little bit. But yeah, you see this hole right here, right? This area right here. That area. Oh no! Wait a minute, I had it wrong. Excuse me. I'm looking at the wrong chart here. It's over here. Okay, yeah, and so so yeah, it used to be here, but since we hit $4 and I would say was it $4.80? Yeah, it deleted that, but it was originally right here. So it was like the 350 to the $8, $7. Like this was a giant hole. Um, Once we get some sustainability above this price, we'll shoot up to this price. This is the target right here. This $8. You can see it. This zone right here, all the way back to right here. It's like $8. But I would say anything from about $7 to $8 is good. Maybe $6 if you're kind of greedy and you just want to lock in profit. Maybe, right? But I would say equilibrium will be 7, and the high point will be like $8. I don't really see it making it to 9. I think that's going to be the finale, and then it's going to have that bell-shaped curve to it. It's going to be going up like this and then going right back down, and probably we could see a retest of some major support we have here. And there's one that we're currently, I think, we will surpass, and we will make it down to this zone right here at around $1.80 right there. That's what I'm personally thinking we're going to go to that level. But I don't know. It all depends on the $2.50. If we hold $2.50, then we will not be seeing that. And if the MACD does roll over in a positive scenario, especially on a higher time frame like the weekly, then that suggests we will probably not be seeing that 180. We'll be at that local bottoming area, wherever that time frame is. All right. Talk to you guys later. Bye.